Hey there everyone, this is Joe from Bullion Now with your weekly technical analysis video. We took a look at the big four over the last 4 weeks: gold, silver, platinum and palladium. Now it's time to look at something a little different. It's the gold to silver ratio. What is it? How can it work for you potentially? I will go through the basics of what it is, how you derive the number, why you want to keep on top of the gold to silver ratio, how it can work for you as a precious metals investor. Then we'll quickly look at the next potential targets moving down and moving up. Of course, you want to visit our website, bullionnow.com.au. There's our address, there's our phone number, there's our email address, because we do ship worldwide with great shipping rates, all your best bullion bars and coins. And you want to subscribe to our channel, of course, for our weekly technical analysis videos, our weekly auctions. You could pick up a bargain, our epic unboxing videos, our YouTube only specials as well. You can get some really good bargain price metal, and that's why you want to be a part of the family. So go on, you know you want to do it. Here we are with the gold to silver ratio. How is it derived? It's pretty easy. You just take the price of gold and divide it by the price of silver, and it gives you a number. So for example, right now, if you take the price of gold, this is priced in US dollars, of $12.92, divided by the price of silver per ounce right now, it's around about $15 roughly. Gives you a number. That's 86.13, and that's close enough. It wasn't exactly $15 per ounce, it's $15.15, but that gives you, as you can see, that's that ratio number. And this is the exact ratio number now. Again, the price of gold divided by the price of silver gives you this ratio. This ratio number changes over time, obviously. This is the tradingview.com website. This goes all the way back to 1998, but we do have a longer term view, takes it all the way back to 1915, but we'll just take it from about 1967 roughly here. So when this gold to silver ratio is at its higher points, what that means is that the price gap between gold to silver is quite wide. And you can tell that right now. I mean, 1 ounce of silver is $15. 1 ounce of gold is nearly $1,300. That's quite a wide gap. When you see this price at its low points, that means the price gap between gold and silver is quite narrow. So for example, that means, let's say right now, gold stayed where it was, but then silver had a massive rise in price up to, $100. Well, what you would see is that the gold to silver ratio is narrowing, so therefore you would see this number drop further and further as the price of silver went up. Or if silver stayed where it was and gold had a massive drop, you would see the price gap narrow, and then you would see that go down. And obviously it goes in the opposite direction. If silver goes down and gold goes up, you see that gap is widening, and then you see this ratio number get higher and higher. So the higher the number, the wider the gap price between gold and silver. Hope that makes sense. Now, how can this work for you? I will do my best to give you a concise reason why you should be following the gold to silver ratio. And I'll give you a hypothetical example. Let's say, for example, you're back in... Well, I won't base it on the chart. I'll just... actually, no, I will base it on the chart. Let's say I had a bullion store back in 1991. I was quite a young chap in 1991, but still, let's time travel. I had a bullion dealership in 1991, and let's say that you inherited 100 ounces of silver in 1991, and you wanted to swap it for gold. Okay? So let's go to the old calculator. So you come into my store in 1991 and you have 100 ounces of silver. You say to me, hey, I inherited this 100 ounces of silver. I don't think I really like silver. I'd prefer to get gold. Can you just give me as much gold as you possibly can for my 100 ounces of silver? Now I look at the gold to silver ratio. It doesn't exactly work like this. This is not really how bullion dealers do it, but in this hypothetical example, I look at the gold to silver ratio, and what do you know? In 1991, on this particular day, the gold to silver ratio happened to be 1 to 100. So I go, yeah, sure, look, I'll give you as much gold as I can for your ounces of silver. The gold to silver ratio is at 1 to 100 at the moment. So for your 100 ounces, if I divide that by the gold to silver ratio at the time of 100, I will give you 1 ounce of gold for your 100 ounces of silver. Fantastic. You walk away with 1 ounce of gold in your hand instead of having to lug around 100 ounces of silver. Now, here's where it gets very interesting. Let's say, for example, you had have waited not until 1991. Let's say you inherited that in 1991, but you decided to hold on to it. And for whatever reason, you decided at around about April, May of 2011 that you were going to come into this fictitious bullion dealership and do the same thing. Bring in your 100 ounces of silver and swap it for as much gold as you could. Again, you don't remember this. This didn't happen. So you held on to your silver and you waited until 2011. So you come into my store. Hey, I've got 100 ounces of silver. Can you give me as much gold as you possibly can for this? I go, yeah, no problem. I take a look at the gold to silver ratio on that day, and it is at 1 to 32. I go, yeah, cool, no worries. I'll take your 100 ounces of gold, your 100 ounces of silver. Sorry, I will take your 100 ounces of silver, and take it by the current price of the gold to silver ratio, which is 1 to 32. And here is your 3.125 ounces of gold, sir. Well, isn't that really interesting? So, in these two scenarios, if you had have swapped your 100 ounces of silver, here at the 1 to 100 ratio, you would have gotten 1 ounce of gold. But if you had have waited until the gold to silver ratio was a lot lower, at 1 to 32, you've tripled the gold in your hands. So this is where it works really well for you as a precious metals investor to play the gold to silver ratio. If you are a silver bug, what you can do is you can up your ounces of silver by swapping your silver for gold when the gold to silver ratio drops. And then if you want to get more ounces of silver, you wait till the gold to silver ratio rises, and then you get more silver ounces in your pocket without having to outlay too much extra cash. There's always going to be a few fees. And this is particularly what happens when I've had customers come into the store. They've come in to me and said, I've got X amount of dollars to spend. Give me gold. I want gold. And I say to them, are you sure you want gold? And they say, yeah, gold. Gold is money. It's the best investment. Gold is blah, blah, blah. My grandfather used to buy gold. It's what I know. It's what I'm used to. And I say to you, okay, that's fine, but let's have a look at the gold to silver ratio because it's really high right now. I would suggest that you buy silver right now instead of gold. And you say, why? Well, I say, because if you buy silver now, you wait till the gold to silver ratio drops lower, even if your end goal is to get as much gold in your hands as possible. Don't buy gold right now at the 1 to 100 ratio. Wait until it drops, and then you can get much more gold in your hands. So I hope that makes sense. So what people do with the gold to silver ratio is they swap in and out of gold to silver, upping their ounces as they go. And so they're upping their ounces of gold, and they up their ounces of silver if they time it correctly, without really having to outlay too much fiat cash. There's always going to be a little bit of a conversion fee, bullion dealer premiums and stuff like that. But the wise investor takes a look at the gold to silver ratio and tries to time it as best they can and swap in and out of gold and silver to up their ounces as best as they possibly can. So that's why I think it's a good idea to take a look at the gold and silver ratio. Keep it on your charts. And if you have a lot of silver right now, when the price goes down, and when the gold to silver ratio goes down to a certain number, whatever that number that is for you, consider moving part of your silver into gold. Because what might happen is it might rise up again, and then you can swap your gold back again for silver, and you've got more silver in your hands. I explained that just before. I hope that does make a lot of sense. So that's the reason why you should be looking at the gold to silver ratio. Let's have a quick look at the next or the major price targets. So obviously right here you've got the big one here, the all-time highs of about 1 to 100. That's the big one right there. Let me just draw that in again. Right here, the 1 to 100 is your big level right here. The next significant levels, and I'm using the longer term chart here just to give you a better overview. The next one here I can see would probably be around about here. You can see 1, 2, 3 points of resistance, and that's at about the 80 level, and we're currently hovering above 80. So what you might find is that let me just do that. What you might find, and I'll move this, I'll get that out of the way, that we might have a little potential area of support here at the 80 mark right here. So could we bounce off the 80 mark and keep going higher, going closer and closer to the 100 mark? And again, that means that silver is more valuable to buy if you want to swap it for gold in the future. So silver is a better investment when the gold to silver ratio is higher, right? As the gold to silver ratio goes lower, gold gets more and more of a better investment. So that's one of the targets there. As I said, we had the 100. Let me pop that in right about there is the 100. Your next level is about 80 when we're kind of near that right now. The next one moving down, actually I'll go back to here. The next one moving down, I think the good one right here, you see right there through those 1, 2, 3, 4 points. That's around about a ratio of about 45 is a pretty good ratio number right there. And in between there, let's have a look. You've got this ratio, I think, of about 60 is not the bad ones moving down. As you can see right there is that point right there where it did have that bounce between about 45 up to 60, back down to 45, up to 60 again, broke through, went up to the 80 mark there, hovered around the 60 again for a little bit, back down to the 45, back up to the 80. So you can see that trading range there. It's a big trading range you can notice, particularly in between the 80 level and the 45 level, roughly. And you've got this new trading range here between the 80 level right here and the 100 level. So the next main level here is at the 100. Where we move up from there, well, actually, you know what? I don't know, because it's uncharted territory. I would suggest that the 1 to 100 level would be a significant level of resistance. And because don't forget as well, where gold goes, silver does tend to follow eventually. So if gold has a big spike in price and silver stays where it is, you would see the price, the gold to silver ratio, go higher and higher. But eventually silver does tend to catch up. I'm not going to give you a prediction that you will never see a breaking of the 1 to 100 ratio, but I don't think it could go much, much higher than that. That is my personal opinion. It is not financial advice. Let's see how low we could go. And we could go back one day in history, one day in the future, I should say. We could absolutely, without a doubt in my mind, possibly get back to this level right here. It's happened twice before in the past, 1967 and 1980. It one day could get back there. So have a think about buying silver now. If you love gold, good on you, fantastic. Gold all day is a great investment. But silver right now, at the current silver ratio, gold to silver ratio, with it so close to its all-time high at 1 to 100, silver is a fantastic buy right now, if you think that is, and if you believe that the gold to silver ratio could continue over time to go up and then down and then down and down even further, possibly one day to this even 1 to 15 mark. 1 to 20 even, maybe even here is a good price. And some people, depending on who you follow, have even been talking about going even lower and talking about 1 to 10, 1 to 5, even some people are talking about a 1 to 1 gold to silver ratio. So with the gold to silver ratio so high at the moment, at nearly its all-time high. Silver's a great buy. So I hope that explains the gold to silver ratio well enough for you. I appreciate your time. Of course, you should be following it yourself. You can follow it on the trading.view.com website, the tradingview.com website, and you look for gold. If you type in here, you go gold, silver, and then you'll find it right there, gold silver ratio, and click on that, and then you can stay on top of the gold to silver ratio, trying to swap in and out of gold and silver. Come into a bullion dealer like us, and we will facilitate gold to silver swaps. It may not be at the exact rate, but it'll be at around about a close rate, because we do have to make a little bit of a profit ourselves. But come in with your silver or with your gold and say, hey, I don't want to sell and then buy or and then buy. Just here's my gold, here's my silver, swap it for the other metal, and we'll do the calculations, taking into account a little bit of profit for ourselves, and we'll just do a straight swap for you. So that's it, gang. Of course, website, gave you the details before, and YouTube, hit the big red subscribe button. I hope you found this informative. If there's anything else I can help you with the gold to silver ratio, put a comment below and I'll do my best to answer your questions. If you have a better way of explaining it too, put it as a comment in this YouTube video. I'm sure the other YouTube subscribers and YouTube viewers would love to see your opinion as well. That's it, gang. Stay safe and we'll speak to you soon.